All right. Hello, everyone, and happy new trading week, whether it's Monday or if it's very late on Sunday night. Thanks for tuning in to the daily currency call presented by Forex Trading Asia. So just a quick introduction as well. This is episode 403, and it's the 25th of October. And for what the currency call is, we analyze the following currencies. Monday, we do Aussie and Kiwi. Tuesday, we do the Euro. Wednesday, we do the Pound. Thursday, Yen and Gold. And then Friday, we do CAD and crypto, specifically Ethereum and Bitcoin. So this currency call is where you'll get the market economic updates. You'll get the key support and resistance levels. You will get trade ideas and much more. This currency call is going to be very beneficial to both the long-term investors and the short-term traders. And here we will go through what could move prices, the possible trade ideas, and we'll also be highlighting the potential targets and risks. A disclaimer as well, any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering any trades. So just to start off the call this morning, we've got Gim Hong, currency strategist with LCMS Traders, discussing the Federal Reserve Chair. Jerome Powell spoke on Friday night at 11 o'clock GMT plus 8, and he just wants to explain what happened with that and any potential opportunities in the market from what he said. So over to you now, Gim Hong.
All right, thank you, Scott. Happy Monday, everyone. Welcome to another week of action-packed events. Okay, so last Friday, wow. I hope you guys didn't get caught in the market at like 2300 GMT plus 8, because that was the time when Jerome Powell was actually giving a speech at the Bank of International Settlements. Okay, personally, I did not expect too much coming out from him, okay, last Friday, but then he actually spoke. He actually said many things, okay, several things I would say, all right? First thing, there is actually a change in tone that inflation is transitory, okay? So I quote, all right, this is what he said, I quote, "The risks are clearly now to longer and more persistent bottlenecks and thus to higher inflation." Okay, as we all know that for the past like 9 months or 10 months or so, okay, the Federal Reserve, okay, Jerome Powell specifically, has been downplaying inflation, okay, claiming that, you know, inflation is just transitory. This is going to be just a temporary kind of thing, okay, and, you know, unlikely going to last for long, okay, and the reasons behind it are just going to be transitory, all right, rise in oil prices, supply bottlenecks, and things like that, okay. However, this time round, okay, I think he's pretty much already convinced, you know, that this whole supply bottlenecks issue is, you know, besides being the main concern of the spike in inflation, okay, it is unlikely going to, should I say, it is likely that it will last longer, okay, probably well into 2022. Okay, now that we are just like 2 months away from the end of 2021. Okay, so, you know, this whole inflation thing, yeah, previously it was deemed as transitory. Right now, you know, as we heard it from Powell firsthand, it is likely going to be lasting for a longer period of time. Okay, more persistent. All right. That's the first point. All right. Second point, we can actually expect a quantitative easing tapering in November, okay? Because once again, I quote, that's what he said. "I do think it's time to taper, and I don't think it's time to raise rates," okay? So it's clear, okay? It's clear. QE tapering, we can expect it in November, all right? It may be in November, it may be in December, okay? But, you know, because of all these whole inflation issues coming in, you know, it's going to be the case that the Fed has to act on it, all right? That's pretty much what he meant when he said this. I do think it's time to taper, okay? So I think before this speech, okay, the market was actually wondering if, the most recent release of the non-farm payroll data is going to affect the Fed's decision. Okay, right now, personally, I think it's unlikely going to affect much. Okay, so in September, 194,000 jobs were being added. Okay, as opposed to the expectation of 490,000 jobs. Right now, it seems like 194 is sufficient for the sufficient condition to be met, okay, for employment, okay, for tapering to take place. Now, with this whole tapering, with this whole expectation that the tapering is going to take place in November, probably like in December as well, okay, how long will it take, okay, for this whole tapering to run before QE is before QE comes to a complete halt? All right. Jerome Powell, according to him, he says that the Fed is still on track to complete tapering by mid-2022. All right. Now, keep in mind that the Federal Reserve only meet 8 times a year. Okay. And the next meeting is on November 4th. Okay. And then December, they'll be meeting again. And then, 8 times for 2022. All right. So by mid of 2022, will they be, if they were to actually complete tapering by mid-2022, okay, that means, from now, probably from November onwards, okay, there's probably going to be like 8 meetings, okay, until mid of 2022. So if you do some simple math, that's going to lead to like a $15 billion per month of tapering, okay, until the whole $120 billion quantitative easing will come to a complete halt. Okay, so yeah, I mean, if you put all these numbers, all these points together, okay, you will see that it is likely that we can expect at least one tapering, okay, this year, which we only have like 2 more months to go. Okay, so those 2 are the main points that Jerome Powell sent out last Friday. Okay, which led to, well, strengthening of dollar, and you can see that there's actually strong, I would say, pullback in most of the charts, in gold as well. Okay, the next thing I want to highlight is this. Okay, with all this whole long-lasting inflation being expected, and rising in price in the US, oil prices as well. Okay, I think I just checked the oil price for the WTI. Okay, it's trading at around 85 dollars per barrel. Okay, it is currently trading at the highest probably for quite a while. All right. So with all these rise in prices and things like that going on, all right, the question I would like to pose is, will we be seeing the start of rate hike in 2022? Okay. During the previous projection materials being released by the central bank, okay, the Federal Reserve, we have seen that many of the members are actually expecting an earlier rate hike, okay, in 2023. 2022, yes, there were a couple of members, carrying forward their projections of a rate hike to be held in 2022. But will this be a new, I would say, a new timeline? Okay, because Jerome Powell also mentioned something last Friday. All right, so I quote, "If we were to see a serious risk of inflation moving persistently to higher levels, we would certainly use our tools to preserve price stability while also taking into account the implications for our maximum employment goal." Okay, now we would certainly use our tools. What tools do they have, right? Okay, right now we only know 2 tools. Okay, quantitative easing, okay, which according to him will come to a complete halt by mid 2022. Okay, now the second tool, okay, as we all know, is interest rates. Okay, if they were to okay, with prices rising like it is right now, okay, at the current pace, the only way, or rather should I say, one of the main ways to actually tame prices, okay, to tone down prices, to bring prices lower, okay, is to rise interest rates, okay, because a rise in interest rates across the board, okay, will actually lead to more expensive loans, okay, loans to be more expensive. That will in a way discourage people from lending money and things like that. All right. So, which is why I'm actually posing this question: will we be seeing the start of rate hike in 2022? Okay. At the moment, at least for the remaining 2 months for 2021, no chance. There's going to be no chance that we're going to be seeing a rate hike from the Fed. Okay, because at the moment it's still considered too premature. Okay, for the Fed to actually rise interest rates. But for 2022, probably the second half of 2022, when the quantitative easing were to wind down, okay, I think it's fair game, okay, to start speculating, a rate hike during the second half of 2022. All right. So just pay attention to any mentioning of rate hikes or hint to rate hikes by any members of the Fed. Well, since nowadays they have been coming up to public to speak more often than ever, okay? And of course, pay attention to the Fed's meeting on the 4th of November, all right? So early next month, I'll probably be giving you guys a preview of what to expect on the FOMC meeting, all right? So that's all I have to share for now. Yeah, if you guys are wondering why the price movement, last Friday, this is because of what Jerome Powell has shared with the public. All right. So with that, let me check if there's any question. No questions. Great. All right. With that, I'll hand it back to Scott.
All right. Thanks for that, Gim Hong, and welcome everyone. There's a few returning faces as well. Richie Lee, welcome. And Robbie is back as well. So that's going to be a good competition to see how that all plays out as well. And look, guys, also, if you do have any questions during the call, please feel free, leave the question in the chat as well, and we'll happily get to it, as well as the LCMS Traders Club. I've shared the link as well for that in the chat, as well as the link for the YouTube channel and the link for the live currency call that we're doing now. If you could share that around, that'd be much appreciated, and spread the word about LCMS traders. But getting into it now, we've got the US dollar index here. So like, Gim Hong did mention, on the daily chart, this is now with Samtrade, we really do see, and just now, actually, it'd been hovering around 93.60, but we have seen it turn lower. And just in context, you can see that's the bottom of the range we've seen for this month, and we're nearly actually at the end of October already. So a breakdown below 93.50 to 93.45 is recent lows. Now, the thing is, we don't really have a lot of news out today, but what I would like to bring up is in equity markets, and I do this occasionally, there's a lot of earnings this week in the US. So what we really could see is that risk sentiment continue to be risk on. And I'd say that I have, been a bit tentative about the downside on the US dollar, and it is still clinging into this, support area at around the 93.50 where we are. But this week we've got, the big companies, we've got Apple, we've got Microsoft coming out. And if these are really good earnings, we could see the US dollar break down further, especially if it gets below the support where it's at now. So that's something to consider. So what would happen then is that we could really see some extended moves, especially we've seen the Aussie is a risk sensitive currency, the Kiwi is too. And the Aussie, I won't go into detail, but it's definitely an interesting point as well. Now, last week we did see the PMIs come out on Friday. I just briefly want to touch upon that. It was a services-led PMI strength as well, which just means the manufacturers are still lagging behind a little bit. And I've just got the calendar up here now. And what I will do, guys, if you haven't already, I strongly encourage you, get registered with Forex Trading Asia. It's free to do so. And there's a lot of good articles. Gim Hong, myself, Jin, we all post on there as well. But just want to touch upon Friday, and I'll just cover that as well. And then just to show you what did take place. So we had, and again, not a lot to take out of this, but definitely the market, the manufacturing PMI did miss. We had the services PMI was considerably stronger. And again, a talking point would be still what Gim Hong mentioned. And we do share this call, if you didn't catch the whole thing, on the YouTube channel too. So I would strongly recommend you do catch that, and we do share it on the EchoFin platform. And then today, not really much happening at all. But Gim Hong also mentioned this with the price of oil still really high and what the USD CAD's doing. So there's a lot of potential here, and we do discuss it all in the currency call. But I think going forward, really with the US dollar, more weakness is present. And to take us further in the call, we do have Jin here, multi-million-dollar trader. And interesting question here as well. Felix, is there anyone that you have in particular to take it, or with gold and tapering, how do I understand the correlation between them?
I'm sure Gim Hong will answer it, or if not, then, oh, well, he's typed it up already. If not, then I'm sure we can go into more detail with that in the Traders Club.
That's right. And I'll let you take it over now, Jim, but we will help you out more in the Traders Club. Felix, I'll share the link again.
Alrighty, thanks for that, Scott. So brand new week towards the end of October. Now we did see, as the guys has been talking about, and I'm just repeating a little bit, we have seen a lot more volatility on the US dollar, mainly because of what Powell has been saying, and also in the technical aspect, as Scott was sharing with you, the dollar index was sitting at that 93.56 level, testing lower. The last time I spoke about it, I said that we're likely to see it bounce around at this level and then possibly head towards 93 flat. So with that in mind, today we are talking about the Aussie and the Kiwi dollar. What could happen? There are quite a bit of news to be released this week for the Aussie, and the Aussie in particular. Looking at the Forex Trading Asia economic calendar here, today anticipate that it's not going to do too much because we have New Zealand on a Labour holiday. We have some news from the Eurozone, but not likely to move prices too much there. Again, on Tuesday, some scattering of news, nothing too exciting, but look at it on Wednesday. We do early Wednesday morning, 8:30 a.m. GMT +8. CPI number for Australia year on year was 3.8%, expected to go to a 3.1, right? CPI or inflation quarter on quarter expected to hold at a 0.8%. So in my view, how I look at it is that there has been so much attention focused on inflation being extremely high or too high above the central bank's targets of 2 to 3% right around the world. All central bankers are thinking about it. It seems like inflation is likely to be high, but it doesn't, at this point now, it seems to be coming back down a little bit. It doesn't look like inflation is going to run out of control. The risk for stagflation, the risk for hyperinflation is still there, but it looks like as central bankers or as the world looks into how inflation has been growing, they have taken actions to temper it down a little bit. They have taken steps to slow it down. So, talking about tapering, talking about potential rate increases, what we have seen is that with all that commentary, we have brought it back down a little bit, not anticipating it to stay at that 3.8 or even a 4%, looking like it might drop back down a little bit. We did see that happen on the pound or the UK CPI numbers as well, came down a little bit lower than expected. So this might be a bit of a relief for the Aussie dollar to show that inflation is not going to run out of control, still higher than they would like, but not going to run out of control. With the CPI quarter on quarter looking at holding at a 0.8%, we might see that as a bit of a stability or as a bit of a positive note. With that, on the Aussie dollar and the Kiwi dollar, we do have, well, we've got the Bank of Canada, which we spoke about before. last week on Friday. You can see on Thursday, not a lot of other news, but the US GDP quarter on quarter, big drop ahead, looking to go from a 6.7 to a 2.8%. Quarter on quarter GDP for the US dropping from a 6.7 to a 2.8. If that does happen on Thursday evening, then we might see that dollar weakness continue on further. And then on Friday, we have some Aussie PPI numbers, retail sales number at a 0.2%. And then not much else with the CAD GDP numbers. I'll tell you about that on Friday. US consumer sentiment holding at a 71.6. So what you should gather from all this is that, one, we're going to see a bit of a stability or a bit of a toned down CPI number year on year, stability on a quarter on quarter basis, and with the US GDP possibly dropping from a 6.7 to a 2.8. Putting all that together, what it could mean on the charts is the dollar on the Aussie dollar on the H4 time frame. What I'm looking for is for it to test. So this was when we spoke about it last week. It didn't test lower. I would say it's invalid now. What I'm looking for is to test that 75 level. Test it towards the upside. Can it break 75? It's not that far away. It's sitting at 74.84 right now. So about a good 30 pip move towards the upside, we could see a good buying opportunity. Above 75.13, 75.13, you could have a 20 pip stop loss for a good 60 pip take profit level, a 1:3 risk reward ratio towards the upside, towards that 75 resistance level. Why I think that it might happen is that we see it on an upward move. The last time it got to 75.38, it retraced back down. I think that retracement is quite healthy in terms of an overall upward move. So look for it to break that 75 before we could see 75.75. That's quite straightforward on the Aussie dollar. On the Kiwi dollar, a little bit easier because it has tested that 71.46 level. The last time we spoke about it, I said it was going to go up, test that level. It went up, tested, and broke slightly higher. Same pattern as the Aussie dollar, but it has dropped and hit that 71.46. Currently looks like it's bouncing off. I would say a slight move further, a good 10 more pips. I would say about that 71.74 buying opportunity, a 30-40 pip stop loss for good upside. So I would say about there, right? So about 71, 71.73, 30-40 pip stop loss, 100 pip take profit level, a 1:3 risk reward ratio towards the upside, towards that 72.89 resistance level. So it's quite straightforward. I think it's easier on the Kiwi dollar because there is not a lot of news to be released there. We do see that upward move continue for the New Zealand dollar, and also because the dollar index is testing or looking like it's going to break below that 93.56 level. If it does break below, then or it does close below that point, then I could see it come down towards that 93 flat. With that said, quite straightforward. Look at the Aussie dollar, look at the Kiwi dollar towards the upside, testing those support levels. Back to you, Scott.
All right, thanks for that, Jin. And just scrolling here, Noah has a question about any specific reason for the massive expected drop in GDP. And Noah, was that for the Aussie?
Noah, no real, it's not a surprise in terms of the big drop in the GDP. What's currently happening with the dollar is, or the US, is that they're facing a bit of a supply issue. People are buying more, there's less production, hence that anticipated drop in the GDP. So it's all about production, ability to get raw materials, to get resources to produce, getting people to work, We've seen that with employment numbers as well. So putting all that together led to that expected drop in the GDP numbers.
All right, thanks for that, Jen, and thanks, Noah, for your question. Just finally, I've just shared the link for the Forex Briefcase Managed Account Service as well for anyone that is looking to get invested and just have their account managed professionally if they don't have time. I did see someone mention that they were looking for someone, and we do offer that, and I have sent you a message as well. So thanks again, guys, for viewing. I just quickly want to do one more thing as well. So we've shared the link for the LCMS Traders Club, and the link there will take you to this page here. So what happens here is that you scroll down, you can see what it's about, get a bit of a general idea, and then we are offering the 30-day free trial as well. You click that, fill in your information, and then you can jump in, and really there's no risk there. You can see what's going on. And especially if you're a trader that's bounced around from various forums, and there's a lot around out there that really, unfortunately, are not that great. And you can see for yourself the difference that is there too. No matter if you're a short-term trader, if you're a real fast scalper, swing trader, if you're even in the longer-term stuff, we all can offer insights as well and trade ideas too. So that, I would say, is a must-do as well, especially with the end of the year coming too. And we will be posting this update as well on the YouTube channel, guys. And just checking, I think Gim's just making a few comments, and I think that's it as well. So thanks for joining us again, guys, for Monday's call. Hope to see everyone tomorrow as well. And happy trading, and hope to see everyone in the group chat as well for the trading floor, guys, in the club. Bye for now, guys.